Welcome back guys to the channel. So we're back with another video, and today we are going to look at advanced order types in the markets, forex market specifically. So in a nutshell, we have three advanced order types. On if you're trading on Xness, they are all here, where we go in the pending options there, and for the normal orders we go to market, but for advanced orders we go to pending. So we have three types of advanced orders. So this is the video about these orders, and without wasting any time, let's jump right into it guys. So their first order is limits, buy limits and buy stops. So we are going to see in which scenarios you have to use buy limits and in which scenarios you're going to use buy stops. The third order is one order that is called OCO orders, which is one cancel the other, is the full meaning of the abbreviation OCO. So in forex we don't have OCO, and specifically on Xness, on MT5, on most brokers we don't have OCO orders. I don't know if there is any OCO in forex, but as per our knowledge we only have limit, buy limit and buy stops, or sell limit and sell stops. So for example, this is a pending order, a pending buy order of 0.01. We are using BTC as an example because right now it's only the instrument that is open, but this is the same as any other currency. So we have for example, we are going to place a buy limit right there, and then we are going to the buy stop right there, and then we are going to place another pending order below or here. We are going to place another buy. So this is a buy limit and this is a buy stop. So when do we use this kind of orders? We are going to try and create a scenario where we use each of them and we see how they work and how do you use them. For example, we have if you look properly here, if you do a simple analysis here, we have our resistance. I'm going to plot here. We have resistance right there, and we have our supports right there. We have our supports right there and we have our resistance right there. For example, this market is in a ranging market, and as per your analysis, this is a major support, so it means the price is moving along the support and is going to move to the upward side as per your analysis. So it means you're looking for buy opportunities. Now if this is the support level, you're going to want to put your buy within the support. Now any order that is below the market price, the market price is 260.85, so which means any order that is below the market price, any pending order below the market price will be a buy limit, and any pending order above the market price will be a buy stop. Now when do you use a buy stop and when do you use a buy limit? If you've already identified your support in the market or your point of interest that is below the market price, then you will use a buy limit order. And if you have identified your point of interest in the buy, in the when you're buying on the, when you're looking for an entry on the buy side, but you're targeting the price to break above a certain resistance, it means you're going to place your order above the market price, which will be a buy stop. So these two orders are both buy orders, but because one is below, it will be a buy limit, and because one is above, it will be a buy stop. So the good thing is, if you're placing this order on a PC, there is no issue. You just put your, for example, you just go to the pending option and you move the pending at any point you want. and you place the order. But if you're placing this order from MT5 on the phone or Xness on the app or any other broker, but when you're using a phone, this option is only available on computers. So on the phone you have to set the order directly by the order settings, which I'm going to let's display some images there and you see how it looks like there. So on the phone you have to choose buy limit or buy stop, but on the computer sets the order automatically. Now let me draw some scenarios here. For example, if you're targeting price to come at this point and go back up, it means you will place a buy limit here. But if you're targeting price to break resistance and come back to retest along the support, it means in this scenario you will place, in the scenario here in blue, you will place a buy stop. If price breaks and retests, you just place a buy stop above. If it continues, your order will be filled even if you're not there on the market. So that is the difference between buy limit and buy stop. And for the same scenario, if we are placing sell orders, again we will put for example here a sell order, and then we'll put another sell here, sell order. Now it is the opposite when you go into a bearish market. Right here, when you're trying to target sell below the current market price, it is a sell stop. But if you're selling above the market price, it is a sell limit. It's the obvious order is a limit order. So if you're planning price to go to a certain resistance and you want to enter a sell position at resistance, you go for a sell limit. But if you're selling below the market price, you go for a sell stop. So in which scenario do you go for a sell stop? For example, here, if your analysis is saying price is going to break support and then retest to go into a bearish move, so in this case you'll set your sell stop below the market price, so that if price breaks a certain range, that is the time you are going to enter your sell stop if the price breaks the range. If you're targeting price to go to a certain resistance and enter a sell position, that will be sell limit. So those are the difference between sell limit and sell stop, and the difference between a buy stop and a sell stop. So always use these orders carefully. They are very good. For example, in a market when the market is volatile, for example, you're expecting a breakout of a certain example. Let me see here. For example, we had a breakout right here, and let's say the market was here and you are expecting a breakout right here. So it means you could have placed your pending sell stop right there. As soon as the market breaks, you put your pending sell stop right there. Even if you are in the market on the chart or you are not there, when the market breaks, all the supports there, your order will always be filled. And if you are expecting a retest, for example, along this area, it means you could, if you are expecting a retest along this area to create a move to the downside, this means you could have placed your order right there, but this could have been a sell limit. So it is just the opposite. When you're placing an order above market price, when you're selling, sell limit. Below market price, sell stop. So that is the difference between these orders, and they are normally used when you're expecting a breakout in the market or a huge impulse move on the charts. So thanks for watching, guys. If you haven't subscribed to the channel, please subscribe and hit the notification bell so that you are notified every time we post a new video. Thanks for watching, guys, and keep it up.